Hello everyone and welcome back, my dear friends. In this video, I am going to explain to you exactly how to start trading futures on the new Binodex platform. So in today's video, we are going to discuss all of the most essential information you need to know before you start trading futures. If you like this topic, I will make a longer video about futures, around 20 minutes, where I will cover every aspect in even greater detail. But today we will talk about the basic things you need to know before getting started with trading futures. Before we start this video, I also want to mention that I have a Telegram channel where we hold trading sessions every day, together with my team. We hold 2 trading sessions on weekdays and 1 trading session on weekends. We are also currently running a challenge where my team and I are trying to reach a goal together, from $100 to $50,000. If you want to join this challenge, you can simply follow the link in the comments under this video. Just write to me, "Hi, I want to join the team," and I will add you completely free of charge. When you join the team, you get completely free access to the training materials, and you also get access to the VIP channel, where my team and I actually do our trading. So, the link to my Telegram channel will be in the comments under this video. And now, let's move on to futures. Let's start with our trading terminal. And we'll start with cross margin and isolated margin. For beginners in futures trading, I always recommend using isolated margin. Because for example, I have $100 in my balance. I open a trade and use only $10. If the market suddenly moves sharply against me, that is, as far as possible in the opposite direction, then I'm at risk. Only those $10 are at risk. The remaining money in the balance won't disappear anywhere. This is much safer than cross margin. Now let's talk in more detail about cross margin. With cross margin, the exchange uses the entire available account balance to maintain an open position. If the price moves sharply against you, losses can affect almost your entire deposit. That's why cross margin is more often used by experienced traders, and for learning and your first trades, it's better to use isolated margin. So to start, today we are choosing isolated margin. Next, let's talk about market and limit orders. Let's start with what a market order is. A market order means opening a trade right now at the current price. For example, let's say the current market price is sitting exactly at $62,833. If we use a standard market order, we will buy or sell the asset right away at this specific price point. When we use a limit order, for example, we buy or sell only when the price eventually reaches a certain specific level that we have set for ourselves in advance. In other words, we want to buy not here, but when, for example, the chart reaches the $63,000 mark. So that's the difference between market and limit orders. But today I will be trading using market orders. And for those who are just starting to trade futures, I also recommend using market instead of limit at the initial stages. Now moving on, let's take a closer look. What do we see here? Here we enter the specific amount for which we want to open our trade. But I always strongly recommend to those who are just starting to trade, whether it's binary options or futures, to use only a small range of about 1 to 5% of your total deposit at most. Because if you open trades for more than 5%, that's already a significantly higher and more dangerous level of risk, especially if you're a beginner just starting out. Let me open a trade for $100 today, so we won't be taking too much risk. Today I just decided to record this kind of educational video for you. So the initial trade size we set is $100. And next we go ahead and set the important take profit and stop loss. That is, we definitely check this selection box and then 2 fields will appear right here. Let me now explain what take profit and stop loss are. Let's start with stop loss. This is the level at which the trade will automatically close in case of a loss. For example, if I'm willing to lose a maximum of $2, I set the stop loss at exactly that level. And even if I'm not sitting at my computer, the trade will be automatically closed if I end up losing more than $2. Now take profit. Take profit is the level at which profit is also automatically locked in. For example, if I want to earn $5, I simply set the take profit. When the price reaches the desired level, the trade will automatically close by itself. So dear friends, if you are a beginner, be sure to set both take profit and stop loss. You can't go without them. Let me just show you how to set them as an example right now. That is, for example, right now, even without any analysis, we'll just open a long position. I also want to ensure that our trade will automatically close when the price of our asset reaches a specific target price level. At the level of 62,960, I enter 62,960, and that will be the point where our take profit order is set. Here, we set the stop loss. For instance, at this very moment, the price is at 62,192 or 913. And for instance, let's imagine a scenario where we want to close our active trade exactly when the market price reaches that specific point on the chart right now. Let's take a closer look to see at what precise level that would be. For example, we might decide to exit when the price reaches, let's say, the level of 62,860. To be absolutely clear, that target exit price is 62,860. So, for example, if we open a long position and the price suddenly goes down and reaches the level of 62,860, we will automatically close our position. Great, now we figured out take profit and stop loss. Now, moving on, let's talk about leverage. So let's say I only have a total of $10. If I set the leverage to X2, I can open up a trading position for $20. If I set it to X5, then for $50. If it's X10, then for $100, and so on. It might seem really cool to you that you can even set it to X150. But it's very important to understand that the higher the leverage you use, the greater the risk. Therefore, if you are a beginner, it's better to use leverage of ×2 or ×3 at most. With experience, you'll be able to use higher leverage, but at the early stages, I don't recommend taking on large leverage. So now we've thoroughly analyzed and understood everything, and we're fully prepared to open our first trade. But unfortunately, if we look at the chart, the price has already plummeted significantly further down past our stop loss. That is, right now the price is at the 60 mark, and the price is currently at 2,822, while our specific stop loss is currently set at 62,1860. Therefore, we definitely need to change the stop loss level, and ideally we should adjust the take profit as well. But since we're just doing this as a quick example for now, I won't change it yet. Let's, for example, go ahead and set the stop loss right at the very end of this current candle. So, what level do we have here? 62,1802. Let's say 62,802. So this will be our stop loss. Now let's go ahead and click on Open Buy Long Position. And just like that, we can see below that our open position has appeared. Here we can see that we have successfully opened a new trade. It's a long position, margin type is isolated, leverage is X2, and the trade amount, we opened the trade for $100, but since we used 2 times leverage, here it is. That is precisely the reason why the total amount for our open position is exactly $200. Now let us take a much closer look at the interface. Right here we can see how our potential profit fluctuates and changes over time, and in this case, for the moment, as you can clearly see, it is still holding at 0. Here we're starting to see a bit of profit, but it also decreases just as quickly. So let's take a look. Now we're already starting to lose money. While our position is still open, let me explain the difference between futures and binary options. With binary options, you only choose the direction and the time. If after a minute the price is higher, you make a profit. If it's lower, you lose money. In other words, it doesn't matter how much the price changes. With futures, it's completely different. Your profit depends on how far the price moves after you open the trade. In addition, you can close the trade yourself at any time, set a stop loss or take profit, reduce your risk, and lock in profits earlier. This in fact is the main difference between binary options and futures. So, my dear friends, let's return once more to our open trade, and we can see that our position has now been closed because the market price went down and unfortunately hit our specific stop loss level. That's why our trade closed. It closed. That is it. Here our stop loss was set. At this level, the price went lower, our stop loss was triggered, and the trade was automatically closed for us. This is how it works. Let me also explain to you how to close a trade early. For example, let's now remove the take profit and stop loss. Let's remove the $100 and, for example, just for demonstration, I'll set it to $1. So for example, if I happen to leave a long position open, how exactly do I go about closing it early? That is, if I accidentally opened a trade or something else entirely happened, you can always click right here and then click OK to close it. That's it, your trade will be closed automatically at this point. Dear friends, thank you all for watching. If you really ask me to do it, if you leave a lot of likes or write to me in the comments, I will do an in-depth breakdown on how to trade futures in more detail. That's all for now. The link to my Telegram channel will be in the comments under this video. If you want to join my team, it's absolutely free. Just follow the link. Message me and I will add you completely free of charge. That's all. Thank you all for watching and bye bye.